Shoprite reporting 12.5% rise in first half headline earnings per share. That's to 315.9 cents. This due to a robust performance from its stores outside its mainstay South African market. Africa's largest grocer saw sales rise by 13.8% to 46.7 billion rand. Well, let's unpack the numbers now. We've got Whitey Basson, CEO of Shoprite. Whitey, thanks for joining us. So let's talk about these numbers, because everyone wants to understand when the growth from Africa is going to come through. I think that's one of the concerns. I suppose it's the mainstay market in South Africa. We talk about consumers under pressure. How are you seeing that? Are you seeing that? You said that in the results today.
Yeah, I think the results speak for themselves in terms of what the Department of Statistics told you on the December sales growth of 2.5%. We thought you went over 12, so we outgrew the market, gained some market share. But the South African economy for retail sales is pretty flat. Hopefully it will return to a better situation by the mid part of this year. That's South Africa. I'm very worried about, not worried, but I don't like the 2% sort of projected sort of growth rates, especially if you live in a continent where the other guys that are good are now pushing 6s and 5s and 7s and 8s. So what has Shoprite done to that? Shoprite says, listen, we must move our emphasis more into the markets that will grow, into probably the two biggest markets, Nigeria and Angola. And that's what we've done. So we've got by far the most number of stores planned for the next 18 to 24 months in those two countries. And hopefully we will maintain our growth rates by being in economies which show substantially higher growth rates in South Africa. We won't drop South Africa out of our basket because that's still a very strong
Well, you can't drop it out of your basket. I mean, it's certainly a massive part of the business right now.
Yeah, but I mean, we will be opening something like 80 or 100 stores in South Africa every year. Because you must still remember South Africa, although with a 2% growth rate, is still a very strong economy.
Yeah. So when you're obviously catering to the lower side of the market, lower LSM groups, and then you've also got Checkers, which are starting to cater to upper LSM groups. Checkers showing some good growth there. I mean, 13.4% growth versus price inflation of 4%. You've got lifestyle offerings now. You've tried to change the image of it, differentiate from Checkers. What type of customers coming to the Checkers store? Do you see that growth continuing there?
Beautiful young girls like you with lots of money. So.
Lots of money. I'm glad you say that, Whitey, because I wish that was the case. But tell us about the strategy on the Checkers front.
The situation as far as Checkers is concerned is that we deliberately repositioned Checkers starting about 5-6 years ago. The marketing guys have done a great job, and we today have certain elements within the company that we think we lead on by far compared to our competitors. So that has had a good following from other retailers, customers that came over to us, and also obviously there's a new emerging middle class and upper class in South Africa, followed us nicely into Checkers. So Checkers is we're quite happy that area of the market can withstand smaller growths, because in the food end of the market it's not a situation that you don't have money to buy any food. In the Shoprite side, obviously the situation is different. Lots of those people, those are the people without jobs, those are the people that have to take short-term money loans just to pay for the extra fuel cost or electricity. They have to bridge it, and then comes months like September, they have to repay with their bonuses.
Let's talk about competition, because we know, no secret, CEO of Pick n Pay is now Richard Brash. He comes through from the UK. We don't know what tricks he has up his sleeve. I'm sure that's something you think about. But if they had to engage in a price war, would you be able to follow to the extent that it would cut into margins?
You know, I don't know how good he is, if he's very good, or how come that he has left the UK, but to engage in any war in a position of weakness would not be that wise. So I don't expect him, if he's at all as good as the people say in the newspapers he is, that he would really go into a price war. If he does, quite obviously he'll be having a war fight on his hands with Shoprite, because we are the cheapest supermarket in South Africa, and we're not just going to give that up for nothing. But, you know, nice stories make nice stories, so we don't know.
Let's talk about Africa. I mean, you brought up a slide today where you looked at the size of the population in key cities in South Africa relative to cities in Africa. Cape Town, 3.5 million people. You've got 404 stores there. Lagos, 9.5 million, or over 9 million people, and you've got 3 stores there. So
I think we have the only 3 stores there.
Okay, well there we go. But you say you should have 198 stores given the GDP per capita. So how quickly are you going to speed up the rollout to get to that level that you say is the adequate amount?
I think there's some 38 stores at the moment either having been finalized in these contracts and in the process of being finalized. So you're talking, and that's in the next 18 months, so we've got 18 months to add to that one. We're trying to get up to 30, 40, 50 if we can get buildings fast enough. For the first time in the history of Africa, those countries have either got enough money in terms of local money. There's lots of rich Nigerians that can afford to build bigger shopping centers than we can in South Africa.
That is changing, the property
side. It is changing totally. And you've seen the South African guys that have made speeches and have actually put their money on the line to develop in countries like Nigeria. I mean, property developers need to develop where the market grows, just like retailers have to go to where the market grows. So you will see a tremendous speed up of new opportunities in terms of buildings, which has always been the slump, because Shoprite was the only people out there that believed in Africa and we had to do everything ourselves. Now there's a lot of guys that have actually got onto the bandwagon and understand the situation in Africa substantially better and will invest.
When it comes to new stores, I mean, you've been opening up, you talk about quite an aggressive focus on focusing more on Africa, but are there parts of Africa that are underperforming? I mean, are you closing any unprofitable stores on the continent, specific areas of worry?
Yeah, there are areas of Africa which is not as large as we thought it would be. We don't think that East Africa is as much of a growth area than West Africa. So if you look at just 3 countries, just look at 2 countries, Angola and Nigeria, both of them will gain on South Africa by 2020. Nigeria will be a substantially bigger economy than South Africa, and there are no stores. In South Africa we have 2,500 stores, so there's an opportunity for us, giving the situation that we will get sites, to have as many stores as we have in South Africa. Now, we'll be able to manage it. Yes, we will be able to do that. Will the GDP per capita allow it? We will have poorest areas, but most certainly it will have a hell of a number of stores there if you compare it with the South African economy as it stands today.
Interesting, the Angola aspect of your strategy, the focus there. The trading profit margin in Africa has been highlighted as a concern, 4.5%, I think it stands right now. Opportunities to enhance that, do you see in the foreseeable future, the next 6 months or the next year, shorter term, or is that going to be a longer term story, or is it about volume?
No, volumes in Africa is as high and bigger than South Africa per square meter. The situation is when you have new stores, it's very costly to go and put up a store. You can imagine it's a couple of 1,000 miles from South Africa, it's brand new. There has to be head offices established for very few stores, so the cost of running the operation is substantially higher than the cost of running the operation in South Africa. So what you will see is a tremendous improvement as the numbers of stores go up, like you see in Zambia, where we virtually have a store in every town now. Those stores run at the same sort of ratios in South Africa. Shrinkage is higher in Africa, not shrinkage because people are more dishonest or the cameras are not as good. It is shrinkage which we deal in 3 different or 4 different currencies when we supply those countries. So there's a hell of a lot of paper, there's a lot of stuff that we have to manage which is already taken for granted in South African situation. But I think all that is positive to South Africa. There's nothing fundamentally different to Africa. In fact, Africa has a better chance of having a higher margin than South Africa.
Now, the question I have to ask you, which is not a question we ask CEOs, but you made reference to the share price slump this year, being on holiday and seeing the share price slump by 10%. And it's slumped back today again. And the market is disappointed, I suppose, in the growth outlook for the local economy, and also that Africa isn't really coming through in an aggressive way. One market analyst was saying it's 250 Rand in sight. But what do you think about the premium that the stock is trading at right now and all the comments that have come through around the disappointment?
You know, I can't really have arguments with analysts. I don't know how rich they are or how much money they've made for themselves by being right or wrong. I must presume that they know lots of things that I miss. But if I look at the economists that sort of guide us in terms of where the money is going to be spent, I think they have a 50-50 chance of being wrong. So that's the odds that you call. Shoprite is not there for tomorrow. because I think South Africa will be a good country still, and we have vast majority of market share here. And I think we're so far ahead of the other retailers in Africa that unless we do something stupid there, then that would maintain its place. Now, to say that a share, and I really don't want to talk about the share price because I'm not a seller of the shares, but you'll have to tell me who places where and for what reasons when you analyze shares. Would you like to have shares in Europe where the market is growing at zero? Or would you like to have shares in Brazil or in China or in South Africa or in the rest of Africa where you're talking of 8 and 10% growth rates? Now, I've not been able to work out the sums for that. And maybe people are looking at history and then saying, sure, that is what, when we went to Zambia 14 years ago, there was nothing. Today, it's one of our most profitable areas in terms of return on investments, ratios, everything. Beautiful country to run through. You can even have high tea in the afternoon at the falls if you wish to.